Hello everyone and welcome back to Kenster's Finance, where I give you financial education on different topics. Today we're going to be talking about bank accounts and helping you secure your financial future. I'm going to start today by walking you through the different types of bank accounts. There are four main types: the checking account, the savings account, the money market account, MMA, no, not the fighting kind of MMA, and the certificate of deposit account, or CD. The checking account is the most common type of account, with around 96% of American households having this account. It's kind of where most transactions occur, and you've likely heard of it. It acts as a banking hub where many things are paid for, deposits are received, you can pay your bills and your loans from this type of account. There's few transaction limits, as people have money coming in and out in many different ways out of this account, and there's no interest typically on the money here. So any money you have here is kind of declining in value, really. As well, you can access this money typically through things like a debit card or checks, or getting it through an ATM. The savings account is an account used to save and accumulate money. There are typically pretty strict transaction limits. As well, there is typically an interest rate that is earned. An interest rate is the percentage of the deposit amount a bank pays you for holding your money. On average, in February of 2026, this was 0.39% over the whole year. So this is amount they'll pay over a given period of time. So let's say I have $100 and the interest rate is 1%. That means over the course of 1 year, they'll pay you $1 in interest. There are different types of savings accounts, like the high yield savings accounts, and these are typically accounts that offer higher rates than the national average. Okay, let's say we have a checking account and then we also have a savings account. Think about all those capabilities I talked about earlier. If we bring those two types of accounts together, that is how we get our next type of account, which is the money market account. The money market account is a hybrid of a savings and a checking account. They offer competitive interest rates, which are very appealing. As well, you still have easy access to the money through things like a debit card or an ATM. The one thing about them is that they typically require a minimum balance, unlike some other accounts that I discussed earlier. The fourth and final type of account is the certificate of deposit account, or CD. This account is pretty unlike the others. Really, within this account, you go in, you set a certain amount of money, and you buy a certificate. And this certificate has a certain set of time, which is a term, which can be things like 2 months, 6 months, or 1 year. When you buy this certificate, it's pretty much you giving them a certain amount of money, and they say at a certain date after that term period is done, they'll give you that money back plus interest. So let's say I have a CD which is 10% interest and I put in $1,000, and let's say it's 1 year. This means that after 1 year, they'll give me my $1,000 back plus 10% in interest, which in this case would be $100. So in total, after that 1 year period, they'll give me back $1,100. They're pretty low risk, and they're typically can be insured, and they're pretty well set up, and they have a high rate in general, especially compared to some of the other interest rates that savings accounts or money market accounts may give you. There's a fee for removing funds early, so you always want to keep your eye out for that. There are types like the traditional, which has the fees and it's kind of like the regular one. There's a no penalty one, which doesn't have fees, and then there's the jumbo, which has larger interest rates. Now that we've gone through all the different types of bank accounts, I'll take you through some tips. The first one is make sure any account you open is with a bank that is FDIC insured. FDIC is the Federal Deposit Insurance Corporation. And basically what the FDIC does is, let's say bank defaults or they're not able to keep up with their money, then up to $250,000 you have with this bank will be covered. So you want to make sure you have that protection. As well, try to look and shop around for banks that have the highest interest rates. Really, this is just extra money that you can make. And then also, try not to keep large amounts of cash within checking accounts. Because of this thing called inflation, any money that isn't gaining a certain percent is losing value. So you want to make sure that your money isn't losing value by just sitting around in the checking account and not earning any interest. And that's a wrap. Thanks everyone for listening. Come back next time where we'll be talking about my favorite bank accounts, as well as more tips to help you achieve your financial goals. Thank you all for listening. Make sure to like, comment, and subscribe, and turn on those post notifications. If you have any questions, feel free to email me at kenstersfinance@gmail.com, or if you just want to talk finance, feel free to leave a comment or email me there. Thanks everyone.